I think you were one of the first people, Trace, to be at the intersection of Austrian School Economics, gold, and Bitcoin. So before we talk about Bitcoin, cryptocurrency, Bitcoin just reached a new high today, over $5,000. Let's talk about the global macroeconomic situation. I hear a lot of hedge fund managers calling things now the everything bubble. The global central bank's intervention is just really historically unprecedented. Do you think all assets, except maybe gold and silver, seem to be in a bubble now?
Well, let's take a step back and just reorient our view. And the bubble is fiat currency. And so by extension, it's the exchange ratios between all the other assets and the fiat currencies. Because if you've read The Collapse of the Dollar by John Rubino, I really kind of agree with his thesis about competitive devaluations. And so that's what we're seeing. We're seeing quantitative easing, we're seeing bailouts, we're seeing the explosion in debt. I don't know exactly where you want to take this, but China's got like massive amounts of debt. We've got record debt levels since the 2007 financial crisis. And when you look at the quality of collateral and repurchase agreements, repos and other collateral that nobody's trusting each other anymore among the banks, it's just all crazy. It is absolutely insane. And it gets back to the gold price suppression scheme and the interference with the interest rates. And so, yeah, we're in a massive bubble. We're in a fiat currency bubble. And that means that we need to have either a complete implosion through deflationary depression or hyperinflation explosion. And really, if you've read my book, agree with my thesis about the Great Credit Contraction, the hyperinflation of the fiat currencies is actually just the last layer in the Great Credit Contraction. And in this debt deflation. And so, Federal Reserve notes, their debt instruments just evaporating away into nothing, just like auction rate securities evaporated into nothing, and lots of other assets during the financial crisis. And so, that's really what I kind of see. I see that we're in a fiat currency bubble, and we don't have any way to price anything because value and price have been completely bifurcated from each other because of this interference with the interest rates through the gold price suppression scheme.
Yeah, I think that's excellent analysis. I would say that the central bankers and the mainstream financial media have managed to keep a lot of people unaware of what's really happening in the real economy. I think the real economy is in stagflation, and sometimes it's a lot worse stagflation, and sometimes it's a lot less stagflation. And you mentioned either a full Austrian school clearing of markets, which would be painful deflation in the short term, but healthy long term with bankruptcies and assets going for pennies on the dollar, and then hyperinflation. They managed to basically keep things between these two different polar extremes. But the central banks are doing what, 300 billion a month in quantitative easing. The Federal Reserve isn't the main culprit at this point. It's the Bank of Japan and the European Central Bank. And you mentioned China. China, according to hedge fund manager Kyle Bass, who spends a lot of time researching this, he says now China has a 40 trillion in US dollars, not in RMB, 40 trillion credit bubble now.
Yeah, I mean, it's insane. I mean, I don't even know if it's possible for humans to comprehend numbers that are this big. Like we're operating on 10,000-year-old like hardware, right? Where we had like 5 bananas or whatever. And so like trying to comprehend $40 trillion, it's just, but at the end of the day, that's what we've got to deal with, is that we've got to deal with debt deflation and debt and wealth destruction that results from all of this, and wealth transfer. And so, yeah, I mean, I don't know if we can even accurately do accounting on all of this stuff, because we have double entry bookkeeping that we figured out in the 1300s, and it's been completely screwed up and bastardized by our current FASB and IAS and all of this stuff. I mean, you look at how derivatives are accounted for, and we can't even properly account for anything, which, and we'll probably get to it later in the interview because that's why I'm here, right? But talking about Bitcoin, and it's the first practical implementation of triple entry bookkeeping. Bitcoin is going to bring a degree of transparency and regulation done through cold, hard math that's immutable. To this system, and bring it into financial and economic discipline. And that's what the world needs. It needs financial and economic discipline, because these governments, these nation states, are completely out of control.
Yeah, and I think, Trace, I mentioned this at the beginning of the interview. I think you're one of the first advocates for owning both gold and Bitcoin. So a lot of people, I think now that you're only for cryptocurrencies, but I think you still view that people should own both precious metals and Bitcoin.
I'm for whatever's going to work. I'm very much it's not about ego for me. It's not about it's about what's going to work. And when I wrote The Great Credit Contraction, the solution to this intractable problem that the world economy has got itself into, the solution was gold. And, I published the book. We're talking 2008. Guess what? Bitcoin came out January of 2009. And so, as Bitcoin has grown and become more established and hasn't failed and all of this stuff, it's increasingly looking like it could potentially be a solution to this intractable problem. And where Bitcoin is different is gold is the same thing it was 2,000 years ago. It's defined by chemical law and the number of atoms, right? And so, but fiat currency, as we've made advancements in terms of information technology, coming up with things like the telegraph. Well, that's a wire transfer, sending something along the wire, which was along the railroad track, which was along the telegraph system, in order to transfer value over distance, because it used to be cows over distance and salt over time, and then it became gold over time and gold over distance and silver over time. And so, now we've had this era of fiat currency where fiat currency was extensible but not limited in amount, like gold was. Gold is limited in amount but not extensible. And now we got this totally new thing called cryptocurrency or Bitcoin, or actually it's really an internet protocol. And it's both limited in amount and it's extensible. So will it be able to outcompete gold? Will it be able to outcompete fiat currency? Well, it's got all the best characteristics of both and none of the downsides of them. So, it's a legitimate competitor on the world stage now with an $87 billion market cap. And that's just its M1. That puts it in the top 40 currencies in the world. Egypt has like a 55 billion M1, in Vietnam. So Bitcoin is definitely a force to be reckoned with. And it's only like 8 years old. It's brand new. This thing is still in beta. Imagine when it's actually got when this Godzilla actually grows up into something.
And Bitcoin just crossed $5,000 a coin today. I believe you bought it starting around 25 cents per coin is when you publicly disclosed that you were buying it, and you were advocating people to start accumulating it then. Would you still classify Bitcoin as an experiment at this stage?
Yeah, life itself is an experiment. We're always going through this Darwinian process to figure out what is fit for purpose and what isn't. And so is fiat currency still fit for purpose? We're dealing with something that has been nationalized. If we could only send 140 character, if that's the only way we could communicate with our current information technologies, like imagine no email, no YouTube videos, no Skype, you only could use 140 character like SMS text messages by government decree. The market would have to figure out all different types of way to hack around to figure out how to actually get information to flow over the internet. Well, that's what we've done with our money. And it's no longer fit for purpose in this information age. We try to use clown car stuff like American Express and MasterCard and Visa. And by the way, the Bitcoin market cap is now, I think, even greater than American Express's market cap, which is kind of funny. But we use these obsolete things like ACH and bank wires and checkbooks and money orders. This stuff is obsolete. This is stuff that, it's a complete clown car show. And we don't need it in the information age. When people are able to actually take direct control over their money and hold the private keys to their own money and instantly verify the quantity and the quality of the Bitcoins, none of this relying on assay reports from a gold metal miner or refiner. Boom, Bitcoin just, it's so revolutionary in the way that it's the way money should be on the internet. It really is. And anybody who's actually used it in any significant type of a way knows and understands that, and so they see the future because they've actually used the future. Because the future's here. It's just not evenly distributed yet among people. There are lots of dinosaurs out there like Jamie Dimon who, are completely ignorant about the technological innovations that have happened. And guess what? The world gets to pass people like Jamie Dimon by. And then, there's a new crop that become the elites.
Jamie Dimon, I think, Trace, is a hypocrite because he gave, I don't know if he directly wrote the check, but he gave Blythe Masters when she left JP Morgan. She was given $20 or $30 million to fund her blockchain technology startup. So, and she was on the cover of Bloomberg magazine about this a couple years ago. So, I mean, it's totally, and then JP Morgan is also, doing market transactions for cryptocurrency traders for, I think, hedge funds. So this is hypocritical, typical, status quo, legacy system, hypocritical. You talked about the credit card processing machine. I mean, there's a lot, credit card processing companies. There's a lot of status quo legacy systems all over the globe that are obsolete, but they have political power and they have a lot of capital and they're trying to maintain the status quo. Should Bitcoin be even trying to compete with credit card processing?
Well, I mean, Bitcoin should compete with everything that it can. Now, the timing in which it does it, I've actually outlined 7 different major network effects that are taking place with Bitcoin. You got speculations, merchants, consumers, miners who provide security. You've got developers, financialization, and then world reserve currency or settlement currency status. And so those are the 7 big network effects. Keep in mind, eBay completely dominated auctions, and they just had one network effect with merchants and consumers. And then they added a second network effect with PayPal. They became indomitable. Yahoo threw millions of dollars at it, along with hundreds of other companies trying to get the auction space. None of them could overcome just 2 network effects. Bitcoin's got 7. And within all 7 of those areas, and I would say, the closer you are to the first network effect, the more safe your position is. And so, Bitcoin can compete in all of these areas, and there's no reason not to compete in all of these areas. And so, it's going to cannibalize and assimilate it is such a force to be reckoned with. It's really kind of unbelievable to see where Bitcoin is at currently and the rate of change that's happening with Bitcoin. Because SegWit just got activated in August. So Bitcoin pre-SegWit is a completely different thing than Bitcoin post-SegWit. So when people look at charts and they're comparing October 2017 Bitcoin price to, November of 2015 Bitcoin price, it's like comparing gold with, copper. They're totally different assets because the rules of the protocol and what's being enforced has changed. And so, this is a very fast evolving space, and Bitcoin and the rate of change and the rate of mutation that's happening, and then all the businesses being built on top of it. It's going to be able to compete in all of these areas.
I would classify Bitcoin as a successful experiment so far, but it has a long way to go to disrupting all of these other industries. I know, large corporations are starting to take the blockchain technology. They're not adopting Bitcoin, they're adopting the blockchain technology. But I interviewed Andres Antonopoulos a couple months ago, and he said I think only one developer is working on Bitcoin Cash so far, that they don't have a large team of developers on yet. Is that still true?
I don't know, because they're completely irrelevant and don't matter to me. And why would I allocate any time or attention to seeing what's happening there? What was great about Bitcoin Cash is being able to sell it and get Bitcoin. and I mean, my average exit price is like 0.12, and Bitcoin Cash just hit 0.0575 today in terms of the ratio between Bitcoin Cash to Bitcoin. So, Bitcoin has got these network effects that are just monstrous. And I mentioned that 5th network effect, which is what you're honing in on. There's like one part-time clown car developer on Bitcoin Cash, and meanwhile you've got like 400 plus highly skilled internet legends that are working on Bitcoin and Bitcoin core software. People like Bram Cohen, who invented BitTorrent, which has changed the world, by the way, and is an internet protocol. Like 30-something% of internet traffic goes through uses BitTorrent. So, and then we have Adam Back, who invented Hashcash, which is proof of work, that is an essential piece of Bitcoin in the Satoshi white paper. These are the legends that are working on Bitcoin. So it's not like the number of developers, it's the developers that you have. I mean, you could have a whole bunch of junior varsity bench warming high school basketball players, or you could have Michael Jordan. Who do you want on your team? And Bitcoin, because it's the highest mountain and because the stakes are so high there, it's become incredibly competitive. So the people who can actually get their code into Bitcoin Core, yeah, they're the all-star dream team. And everybody else working on the other projects, the sad truth of it is that they're just not good enough to work on Bitcoin Core. And so they whiny rage quit like Mike Hearn did, or they throw little temper tantrums like some of these other developers, or whatever it is. But at the end of the day, it's because they're just not good enough. And if they were good enough, they'd be able to go through this IETF-like process that Bitcoin Core uses for open and transparent code contribution and peer review. It's incredibly important to have peer review, because in this, you can't make any mistakes with Bitcoin. You make mistakes, your money's gone. Like, you can't screw that type of stuff up. And so, hey, money's going to follow the management. And in this case, the management are the developers who are writing this software. And each individual gets to choose what software they run. So who are you going to bet? Who you going to put your money behind? You're going to put your money behind like a part-time JV bench-warming clown car developer? Or are you going to put it behind like, the greatest team ever? Jordan and Pippen and the rest of the Chicago Bulls in the 90s, the greatest team ever, because it's not about just any single developer. Like, Bitcoin's got an entire army, like 400 of the best developers, working on this stuff. Okay, so what? The banks are going to try to make their own blockchain. We saw how that worked with Corda, with Mike Hearn leading that project to complete abysmal failure. And also when we look at how the internet developed, everybody tried to do the intranet thing. Prodigy, Genie, AOL. They tried to have these intranet silos. And guess what? Information wants to be free, and it wants to be censorship resistant. And that's why we have the internet we have today, and why we don't have those silos. And Bitcoin, guess what? It's the open free internet, IETF-like process, and getting that code done. So if you're building a silo, whether you're Accenture or JP Morgan or Goldman Sachs or whoever, like, you're building a silo like AOL, well, we see where AOL's at today. I wouldn't want to own any of that.
Yeah, they just shut down AOL Instant Messenger, which was one of their more popular products. Wasn't making any money, and not anyone was using it anymore. They just totally shut it down. Switching gears a little bit, Peter Schiff just recently had a very intense debate with Max Kaiser about Bitcoin. I know you personally flew up to New York City, I think 2010 or 11. You spent a couple hours in person with Peter Schiff trying to tell him about Bitcoin, and he didn't buy any. Do you think Peter Schiff has some real serious sour grapes about not buying Bitcoin back then and making a few more $1 million at least?
So Bitcoin, one of the most fascinating things to watch with it is the degree of cognitive dissonance that it engenders in people. I mean, it is just absolutely fascinating to watch this psychological experiment. And we already talked about Jamie Dimon, and look at the cognitive dissonance there. Peter Schiff is another phenomenal example of someone who just has had massive cognitive dissonance when it comes to Bitcoin. And he still can't admit that he's wrong. I talked with him early, like you'd said. I was also doing an interview for the Future Money Trends guys in Palm Springs. This was when Bitcoin was $7, and Peter Schiff happened to walk by, so I struck up a conversation with him because I'd known him. We were talking about stuff, and then we had just finished the interview, and the cameras were all done and ready, and the guys were like, "Hey, why don't we just do like a Bitcoin segment?" And Peter Schiff was like, "No, I don't want to do that. I don't want you to make me look stupid." And it's like, whoa. So this is about you and your ego and how you look and your reputation. It's not about like what's best for the listener on the other side of the camera, because that's been my purpose. This isn't about money or making money for me. This is about human liberties, civil rights, freedom of speech, cryptography, sound money, and the impact that has on the political systems. Because gold, silver, freedom of speech, they're not barbarous relics. They're essential checks and balances in the political machinery when it comes to the power of the purse and the power of the sword and all types of stuff. And so, this is a super complex, it touches every aspect of society type of project. And so, when Peter Schiff reduces it to, I don't want you to make me look stupid so that people don't withdraw their funds out of Europact so that I don't make as much money. Wow, right? And so guess what, Peter? The market is going to make you look stupid. and it hasn't it? Because we've got stuff from Peter Schiff whining and complaining and degrading and denigrating Bitcoin for the last 6 years. And guess what? He's been completely wrong. Wrong on perhaps the greatest bull market ever. Wrong on something that he totally should have got because he had the Austrian School of Economics background. And I came and explained it to him personally, one-on-one, and laid out the case to him simply. And so, Peter Schiff, I don't know if it's sour grapes so much as it is, he doesn't want to look stupid, and it keeps making him look stupider and stupider. It's like Dumb and Dumber movie.
I've been interviewing you about Bitcoin and gold and silver since 2010, so I know that you've been saying pretty much the same story about Bitcoin and gold, that it's not an either-or scenario. But there's a lot of I think Peter's a brilliant guy, but I think one of Peter's flaws as a person is that he doesn't like admitting he's wrong pretty much ever. So I think a lot of people.
Well, if he's so brilliant, then why is his scoreboard not very good? Know what I'm saying?
People who are brilliant are not good at everything, though. So just because you're brilliant at Austrian School Economics,
he's saying that. He's out there. He's helping people manage their money. His scoreboard are the returns. His scoreboard sucks. My scoreboard. Want to know what my scoreboard looks like? In the last 7 years, my scoreboard is 2x Berkshire Hathaway's scoreboard in the last 45 years. Twice Warren Buffett's scoreboard in 6 years. That's the scoreboard. So if Peter Schiff is so good at this, why is his scoreboard bad?
I think there's a lot of people in the gold community, especially gold bullion dealers, and Peter Schiff is a gold bullion dealer, who they don't see it as owning both Bitcoin and gold and silver. They see it as, well, there's only a limited amount of investment dollars to allocate to either. So if there's a lot of the anti-Bitcoin crowd is from bullion dealers, I would say.
Well, hey, look, I don't manage money for anybody. I talk about this stuff because I want to help humanity. That's why I talk about this stuff. It'd actually be nice to sit and not be out here publicly, and I take a lot of risk doing this, but it's because I don't want to live in 1957 Czechoslovakia. That's why I'm in the ring, That's why I do what I do. So for me, it's not about how much, how many commissions I get or how much money I make or any of this stuff. That's not what it's about for me. And so my piece of advice might be, for Peter is figure out what your purpose is, behind what you're doing, and try to do something that will benefit humanity and help people. That's ultimately what I think is a much better focus for our activities.
Now, switching gears, I want to ask you about initial coin offerings. I make a distinction between, Bitcoin, some of the other altcoins that have good market caps like Ethereum, and initial coin offerings. I think initial coin offerings, there's a lot of fraud there. How many initial coin offerings spam emails do you get a week?
Oh my gosh, I think I got 5 today. And I haven't checked all my email accounts. That's, I don't even know, because archive or mark as spam, and and then I don't get the next ones or whatever. But yeah, it's crazy. The SEC was actually, they were holding a hearing today on these ICOs and kind of what to do about them and stuff like that. So yeah, there's a lot of spam out there. There's a lot of scam that's going on. And so people, like just be careful, be prudent, be wise, and start from an incredibly defensive position. Do your own network consensus. That means run your own full node and manage your own private keys. Don't let someone else hold them for you. And guess what? That gives you monetary sovereignty. And that's the product that Bitcoin, one of the products, perhaps a really, really big product that Bitcoin is selling. Why you would want to hire Bitcoin is for that monetary sovereignty. That's what you need in this environment. It's like having a gold coin, but it's even better because it's not located at a central place in a central place in both time and space. Because it's just data, so you can split it up and do all types of interesting things with it to co-locate it. And so that's what I'd say is like reclaim your monetary sovereignty. Do your own full node network consensus, hold your own private keys, and then you make the decision. You don't have somebody else making the decisions for you.
Well, I would also say be incredibly skeptical on the initial coin offerings. I mean, I would check spelling first. So a lot of these ICO spams that are frauds, they can't even spell like a lot of the words correctly. It's sent out, the blatant email sent out to a bunch of people. I've gotten some of them, and it's just like the causes they're saying. Sometimes the spam email, it'll be sent every single day, but it'll be the same coin, but the cause that they're raising the money from will change from like biotechnology to AI robotics to Internet of Things. So I've seen that before.
Yeah, just ignore it all. Like really, is the risk-adjusted return relative to holding Bitcoin gonna justify taking that risk? No, probably not. You know, so like just ignore it. Your time is more valuable. Do something else.
And an experienced Bitcoin trader like Adam B. Levine of Let's Talk Bitcoin, he got scammed on an ICO. It was a good scam. They set up a really good website. They even put a fake, actually real LinkedIn profiles of developers there. Not even, they didn't even put the guys. So they took the screenshots of the LinkedIn developers working at Google and Apple and saying they had left to start this initial coin offering. And once the money was put in the initial coin offering, within 2 hours, the website was gone. And then afterwards, he emailed the developers and said, no, we weren't working on the project. So just their screenshots had been taken of their profiles and put on the fake website.
Right. I mean, at the end of the day, people want to hold the private keys of money. They want to hold, you can hold the private keys of money or someone else can. Right now, the banking system, guess what? They hold the private keys of money. That's why they can freeze your bank account. With Bitcoin, you hold the private keys of your money. And so what are these ICOs and all these scam artists and stuff doing? They're just trying to hold the private keys to your money. And then they're going to take it because that's what the banks do. That's what scammers do. Like, I mean, look at Mt. Gox, like, I have a friend. He's unemployed right now. Got laid off 10 months ago, scraping by on unemployment. He has like $8 million tied up in Mt. Gox in the bankruptcy thing because he wasn't prudent enough to hold his own private keys.
Wow.
Like don't let people hold your private keys. Claim your monetary sovereignty. Become the king.
And speaking of sovereignty, I want to ask you now about China. So China has, I believe they banned initial coin offerings. They blocked those. They've been trying to shut down Bitcoin exchanges there. Do you think China is going to be successful at this?
Yeah, right. They got like 1.5 billion people. And okay, so maybe they restrict some of the pipelines of the fiat, via the exchanges and the fiat system, but people can still trade it via cash. And guess what? Blockstream rolled out these satellites, and these satellites are so freaking cool, right? Because right now, in order to run a full node and do your own network consensus, you need to use about 15 gigabytes of data every month, getting new blocks, relaying them, or whatever. With the satellite, that's taken to zero. It's free, completely free. You just have a satellite dish, costs $100. You can put it up anywhere in the world. You can download the Bitcoin blockchain. No bandwidth requirements. And guess what? You don't want your ISP to know that you're playing around with Bitcoin? Use a satellite. You don't want the Great Firewall of China to know you're dinking around with Bitcoin and evading their capital controls or whatever? Use the satellite. And so this is an example of where developers and custom infrastructure is now in place for the Bitcoin network. I mean, this is really awesome because like the traditional internet could have serious problems result from it. You know, you could have undersea cables cut, you could have some type of war or, you know, other stuff that sabotages it. But the Bitcoin network would still hum along in a lot of ways because we'd have all these blocks getting propagated via the satellites. So, you know, it increases the resilience and the censorship resistance of the network. It lowers the cost of running a full node. It increases your privacy so that nobody knows that you're running a full node, not even your ISP, right? And then you can have a laptop that doesn't even have a Wi-Fi card in it, but is still connected to this satellite, and so you can run a full node on a laptop that otherwise has no other networking components to it. So it's much more secure. So, you know, these are features that the Bitcoin network now has that other blockchains don't have. You know, I don't see any satellites for Dogecoin out there. And yeah, so I mean, you want to become the sovereign of your money, like hold the private keys yourself. And guess what? Now you got a satellite, so you can literally do that anywhere in the world. Because these satellites cover the entire planet. They're broadcasting blocks over the entire planet, or will by the end of the year. I think 66% of the planet right now, and they'll have the remaining rest of the planet covered with the satellite downloads by the end of the year. So I mean,
is this
so cool.
Is this the same technology that the founder of Litecoin, I think Charlie Lee, was saying, where he could, totally avoiding Bitcoin, normal Bitcoin exchanges, he can now swap between Bitcoin and Litecoin, Bitcoin and Ethereum, that he can do that decentralized now without even an exchange?
Well, I mean, this is the satellites for Bitcoin are completely different from that. But what you're talking about are cross-blockchain atomic swaps. And SegWit actually enables that stuff to happen, and that's really cool because you can do that now too. So you can trade Bitcoin for Litecoin completely trustlessly, interacting only with the Bitcoin and Litecoin networks. You know, so you don't have to go through any centralized third party or anything. Wow. So, I mean, when we're talking about the mutation rate of Bitcoin in the cryptocurrency industry, like, it's so cool. It's so fast.
I have a couple more questions for you in this interview. How, in your opinion, since you're a Bitcoin expert, and I'm sure you know a lot of people come to you first when they want to learn about Bitcoin, how many hedge funds or institutional investors, you know, big money guys on Wall Street or just big money players are trading Bitcoin now, you think, maybe as a percentage, your best guess?
Not as many as who would want to, that's for sure. You know, just to give an example of that, I was at a friend's wedding at the you know, during the new year, and he had sold his mutual fund for like $150 million all cash, and so you know he is part of the finance community, and a lot of hedge funders and stuff were at his wedding because they're all friends, you know, from the industry. And of course I'm the Bitcoin guy, and I actually knew a lot of them and stuff. And there were, you know, they had probably $500 billion assets under management among all their different firms and stuff, and there were a good probably 6 to 8 of them that wanted to buy $20 to $50 million worth of Bitcoin for their funds. And they're like, so how do we do that, Mr. Bitcoin? And I was like, well, I'm not really Mr. Bitcoin, but you can't do it right now. The infrastructure isn't there. We don't, you know, there's not a custodial service. We don't really have the software in place like for you to do it and keep your fiduciary duties. So, you know, you're gonna have to wait till there's like a good custodial service out there to handle it. And guess what? October, Ledger X got CFTC approval to trade Bitcoin derivatives. They're a swap execution facility now, and they're getting ready to roll out like financial instruments to be able to trade Bitcoin for the institutions. And so yeah, it's going to be really, really crazy. Because if you're a hedge fund, you can't have your manager of IT holding the private keys for $50 million of Bitcoin. And there's no way to prove that you were hacked by the Russians or that he absconded with the money. The money's just gone. There's no way to prove one way or the other. And so, like, you know, fiduciary duty, you gotta, like, this custody issue is a major, major issue for the institutions. And one of the reasons why I think the institutions can't really participate in Bitcoin yet. There's no ETF. these Ledger X options are going to be their first real major step in that direction. We have some like ETN notes on like a Norwegian stock exchange, and there's some other stuff out there like Exanti, but I mean, for like, it's just not there. It's not possible for the institutions to buy on a big scale yet.
Yeah, and the Securities and Exchange Commission said they wouldn't approve the Winklevoss's Bitcoin ETF because I think 90% at that time of the trading volume was on Chinese exchanges, and they said there wasn't enough transparency there and regulatory compliance.
Yeah, I mean, I like reading through the law that's applicable, and then I actually read the entire opinion from the SEC, and I actually have to pretty much agree with their assessment. So based on what the law is, I mean, I think people should be able to buy whatever they want to buy. It's their money. Like, who's the SEC to tell people they can't buy something? You know, why do we all need to be babysat? But whatever, you know, I think people should be sovereigns, that they should own and control their money, not have other people telling them what to do with it. But those things aside, based on the law, you know, I think the SEC made the correct decision in that case. And so, yeah, we don't have an ETF, and there's probably not going to be one until we have a little bit more clarity and innovation in the space, and we have some of these regulated markets that pop up like Ledger X.
The head of the IMF, Christine Lagarde, recently gave a speech a couple weeks ago talking about blockchain technology. Are you worried that governments will try to take blockchain technology and use it for their nefarious forced cashless society to track and tax every single financial transaction in an economy?
Well, bureaucrats are going to bureaucrat, right? But I mean, at the end of the day, like, you either like learn how to use gunpowder and plate mail armor, or you become a victim. So like, blockchain technology is just a technology, right? It's just a new way of doing stuff that's clever, kind of like gunpowder. And so, hey, you know, if you're coming to a knife fight and and you're wearing like a loincloth and you have a fork, guess what? You're going to be a victim. And so, hey, you know, hold the private keys to your own money. Monetary sovereignty. You know, anybody can participate in the Bitcoin network right now. Hold those private keys yourself. Avail yourself of the absolute strongest, most defensive armor that you can possibly get to defend yourself against these governments and other rogue actors out there. And guess what that is? That's the Bitcoin network. Why? Because of the amount of proof of work that is behind its blockchain, because of the security, the safety, and the liquidity and the scalability of its blockchain and what it's reached. And no amount of violence is going to solve a math problem. And guess what? Your Bitcoins are protected by math and by computer processing power. That's this proof of work thing. You know, so you can't shoot that math problem. That's not how this works.
Yeah, so I don't think governments can shut down Bitcoin. They can go after the exchanges like they did with Coinbase with the IRS, you know, demanding that. I think there's other examples of this where you have to say what you're using the Bitcoin for or where the money came from or things like that. But what worries me, though, is them taking the technology behind Bitcoin, blockchain technology, and then either banning cash so you can't go and pay your bills in cash, you know, forcing you back into the system, taking so I don't view, like you, I don't view technology as good or bad. I just, you can, a hammer in the hands of a carpenter can build a house. A hammer in the hands of a member of Antifa right at a protest can hurt someone. So.
Yeah, well, I mean, that's the issue. Like, how many, you know, you close the loop, like operate solely within crypto. You know, you have suppliers for the stuff that you want, the goods and services. You earn your money in the crypto space, and then you just disintermediate and you don't have to use their system. And you know, the other thing is, okay, so what are they going to do? They're going to roll out a Yellen coin or a Draghi coin? Like, why are you going to trust that? It's closed source code. You can't hold your own private keys. We don't know what the block reward emission schedule is, the inflation rate. Like, why trust or use that thing? I mean, it's a joke. It's worse than a clown car.
There is no trust, Trace. You know this. You're a lawyer, so you know all about legal tender and the government forcing you to either pay your taxes with their digital dollar coin or whatever the hell they're going to call it.
Well, yeah,
legal tender laws suck. I hate them. Yeah.
Right, but then there's Shakespeare. Neither borrower nor lender be. So if you're not taking out debt and you're not lending to other people and you're holding the private keys yourself and you're sovereign, well, you've now put yourself in a much different financial position than somebody who's tangled up in a Gordian knot with the current financial and monetary system. Just unentangle yourself from it and stake out sovereign territory where you hold the private keys yourself and you're running your own full node. Then you're deciding like what a Bitcoin is and how you have it.
Are you speculating on any of the other altcoins like Ethereum, Dash, Ripple, Litecoin, or Monero?
Not really. I've watched the Dash project. I interviewed Evan when it was $3, and I think it's like $300 right now. And so I played around with Dash a little bit. I like their masternode concept. And so, if I were to pick any of them out there, Dash would be the one that I am kind of very curious about. And when you look at a chart of Dash in Bitcoin, Dash has actually outperformed Bitcoin, over a couple years time frame. And so that also is, in my opinion, an interesting metric, because it's really hard to outperform Bitcoin. And so, I think that Dash has its problems, and its issues, but on the other hand, it's a pretty interesting project too. And so, why not be diversified a little bit? If you can find an interesting project that is pushing some of the bounds in terms of this monetary evolution.
Do you think a lot of these other altcoins are going to be around in 10 years, or do you think Bitcoin is going to be one of the few survivors?
Well, it's really hard to kill these blockchains. At worst they just become zombies, right? But I think the vast majority of them will still be around. Now, whether they actually have any economic value to them or not is a completely different question. And I think Bitcoin will, be the one that it's got the 7 network effects, indisputably. So it's going to be very difficult for anything to overcome that and even establish itself, So, if you want to be super safe and secure, you just buy Bitcoin and make sure that you're holding your own private keys with it. And then you can venture out and experiment with other stuff from there. But who knows whether it'll be around or not with any substantive economic value. Does it have 400 plus like legendary developers working on it? Probably not. They'd be working on Bitcoin.
My last question before I let you go. So the total cryptocurrency market cap is around 162 billion right now. The gold market, if you look at the sales in the U.S. from U.S. mints for gold and silver, basically retail demand for gold and silver has totally collapsed. Really, since it was collapsing before Trump won the election, but since Trump's won the election, demand for physical gold and silver has collapsed. Do you think Bitcoin and cryptocurrency have taken away a lot of market share from people who would have potentially bought gold and silver, or do you think it's a different crowd?
Yeah, I think the answer is yes. I think that there are definitely a lot of the gold and silver crowd that are a different generation. They're not digital natives like us. They're not young. They're graybeards, and it's hard to change. It's hard to comprehend something that just didn't even exist. The internet didn't exist for these people when they were growing up. It's a totally different world. Like we have a completely different perspective. Digital things are real to us. To them, they're not really real. So and then you also look at like the real returns on gold, for example, the price performance on it, because it's not the retail demand, in my opinion, that's setting the price of gold and silver. It's LBMA and it's the big players that are moving billions of dollars a day settling it via gold, and so that's what's moving the price. And everybody likes to chase the rabbit. Bitcoin's been a great rabbit to chase. It's up a lot. And meanwhile, and cryptocurrency as a whole is up a lot. But meanwhile, you just don't have a lot of that price movement. So it's just kind of boring. And after you've got your your coins in your stack, you don't necessarily need to buy any more. You've got enough to feel safe, and then you get food storage, and maybe you pay off your home mortgage or whatever at that retail level, and then maybe you start speculating in Bitcoin because, hey, it's got price movement. There's entertainment value there. So yeah, I do think that Bitcoin has been eating into some of that market share, and obviously, it's gone from when I started publicly talking about it, less than $1 million market cap, to now an $87 billion market cap and $162 billion market cap for cryptocurrencies as a whole. So, that wealth transfer has come from some other assets, whether it's real estate, gold, stocks, bonds, currencies, whatever it is. And so to some degree, yes, I agree. How much? It's very difficult to quantify exactly. And that's another thing. Bitcoin is very corrosive and insidious to the current system. It just silently eats away at the foundation like a bunch of termites until eventually the whole house of cards just evaporates. And what's left is the equity-based monetary system in its place. Bitcoin, gold, and not having all of this debt because poof, it just evaporated.
And you just had an article put out. One of the journalists on one of the crypto websites just quoted you as saying $27,000 Bitcoin in 4 months.
Yeah, anything for clickbait, right? So first of all, I never made an assertion that we would see $27,000 in February. But what I did lay out is in the tweet, and this article got like 100,000 page views or something. But what I laid out in the tweet was I was looking at the previous Bitcoin bubbles, where they started from and where they kind of ended at. And then I took those current prices and divided by the 200-day moving average, which filters out all the daily noise. And then you can actually plot that to get a relative price. And so then you just look at the first, second, and third standard deviations of that relative price, and you can draw bands and lines, and you can be like, oh, when we're outside the third standard deviation, then Bitcoin is overvalued or it's undervalued, and the probability is much higher, for it to kind of mean revert one way or the other. And so I like to buy stuff when they're undervalued, and I like to sell stuff when it's overvalued. And so this is one of the ways that I kind of derive a relative value for Bitcoin, because otherwise we're just floating in a sea of illusory stuff that's not tied to anything because we're on a floating fiat standard, right? And so looking at that, even at $5,300 Bitcoin, which is where we're at, the 200-day moving average, I think, is something like maybe it's even $3,800 now. I mean, I should probably look because, I like to filter out the daily noise, so I don't look at it every day. Yeah, so the 200-day moving average is $2,766. $5,300 divided by that is almost 2.0, right? And so that's actually not even outside, I think, of first standard deviation. So it's just kind of an average fair price for Bitcoin based on, our entire 8 years of trading history. So if Bitcoin were to go to, say, 4.75x the 200-day moving average, and if the 200-day moving average keeps gaining for the next 4 months and goes from $2,766 to $5,000, which is, what we're looking at happening, it's rising about $20 a day, the 200-day moving average is, 4.75x, $5,000 200-day moving average means that, the blow off top of this bubble could be $27,000. How does that compare to the previous bubbles? Well, that's what I put in the tweet, right? And so, the previous bubbles were like 8x and 32x and 16x or something like that. And so 4.75x would actually be a fairly muted bubble compared to the previous Bitcoin bubbles in terms of the current price divided by the 200-day moving average. So, it wouldn't even really necessarily be outside the third standard deviation, which is kind of crazy to think about. So, when we're looking at where can the Bitcoin price go, whether you should buy it or not, First, get your technical competence, maybe buy a little bit, $50, $100 worth, just to figure out how to use the new technology. It's kind of like learning how to write checks or send emails or attach documents or whatever it is. And then you can figure out whether you want to actually buy large amounts. And then if you've bought large amounts, yeah, you want to know when you should trade them for other assets. And trade them when they're overvalued is kind of my philosophy.
Very good. Well, I always enjoy my discussions with you, Trace. And if our listeners want to follow your more of your work and listen to the Bitcoin Knowledge Podcast, how do they do so?
Yeah, so as I mentioned, I put out tweets every now and then, following the example of our great president, who's very presidential, and that's at Trace Mayer. And then my Bitcoin Knowledge Podcast, you can find it on iTunes. Just search Bitcoin or www.bitcoin.kn. And I interview basically all the top people in Bitcoin, so CEOs of different Bitcoin companies for the most part. And I love what I do, helping people take control of their own monetary sovereignty.
Yeah, and I think it's an interesting discussion. We'll see this in the comment section. You could take a look at reading it. I know I'm going to read it, but there's people that no matter how much facts or data you present to them, they're kind of either in the bullion camp only or Bitcoin camp only because the Bitcoin price is rising. I don't view things that way. I view things as you need to have at least some diversification. And maybe if there's a asset market crash, you should have some cash, some dollars, and you should also own some precious metals and some Bitcoin. So I think, being prudent and having some diversification and owning Bitcoin and precious metals is a good idea.
Yeah, I'd echo that sentiment. I think that, be debt free, invest in yourself, be prudent and frugal and thrifty in your spending, allocate your capital wisely, not necessarily all to one thing, and just generally good financial principles. You don't need to go and get leveraged long on Bitcoin with like 500x contracts on like some of these Bitcoin exchanges. Like, don't be a degenerate gambler. Like, take control of your monetary sovereignty in a very incremental way, kind of like a glacier moves. That way you can defend the territory that you've taken.
Yeah, and I think it's human nature to, whether someone has a lot of experience in investing or trading or not, or they don't even know the market, maybe they don't even know the technology, they just see the Bitcoin chart, is to try to get rich quick. So that's an extremely dangerous scenario. But thanks for your time, Trace. I appreciate it, and have a great rest of your week.
Yep, you too. Thanks, Jason. Always a pleasure.